Hey everyone, welcome back to the channel. Today, we're diving deep into a comprehensive analysis of Berkshire Hathaway, ticker BRK-B, one of the most iconic companies in the investment world. With a market cap over $1 trillion led by the legendary Warren Buffett, or now Greg Abel as CEO, this conglomerate is a powerhouse. We're going to break down everything from their financials to recent performance, valuation, and more. So, grab a coffee, stick around, and let's get into it. All right, let's set the stage. Berkshire Hathaway isn't just a company. It's a massive holding entity with a footprint in insurance, rail, energy, manufacturing, and even retail. Think of it as a giant portfolio of businesses under one umbrella, headquartered in Omaha, Nebraska. With over 392,000 employees worldwide, this isn't a small operation. It's a titan in the financial services sector, specifically in the diversified insurance space. And with recent news of Warren Buffett stepping down and Greg Abel taking the reins, there's a lot to unpack about what's next for this behemoth. Let's dive into the details. So what exactly is Berkshire Hathaway? If you're new to this name, let me give you the quick rundown. Founded as a textile company way back, it was transformed by Buffett into an investment vehicle starting in the 1960s. Today, it owns major stakes in companies like Apple and Coca-Cola, and fully owns businesses like GEICO, Burlington Northern Santa Fe, and Berkshire Hathaway Energy. Their business model is all about acquiring strong, cash-generating companies and holding them for the long term, while also sitting on a massive cash pile for strategic moves. It's a unique setup, more like a diversified fund than a traditional operating company. And with Greg Abel now at the helm, the focus remains on long-term value creation. Let's talk numbers, specifically revenue. Berkshire Hathaway reported a staggering $371 billion in revenue for fiscal year 2024. That's down a bit from $439.3 billion in 2023, but still an enormous figure. Breaking it down by segment, the insurance group is the heavyweight, bringing in $105 billion. Grocery and convenience store distribution through McLane Company added another huge chunk at nearly $133 billion. Then you've got Pilot Travel Centers at $46.9 billion, manufacturing businesses at $49 billion, and Burlington Northern Santa Fe contributing $23.6 billion from rail operations. Energy, through Berkshire Hathaway Energy, pulled in $26.3 billion. It's a diversified revenue stream, which is a big reason why this company can weather economic storms. Geographically, they operate globally, though the bulk of their operations are U.S.-centric. This mix shows how spread out their income sources are. No single business dominates too heavily, which is a smart risk buffer. Moving on to earnings, let's see how profitable Berkshire has been. In 2024, they posted a net income of $89 billion with an EPS of $41.27. That's a solid result, though slightly down from 2023's $96.2 billion and $44.27 EPS. Looking back, their earnings have been a bit of a roller coaster. 2022 was rough with a net loss of $22.8 billion due to market-driven investment losses, but they bounced back strong in 2023 and held steady in 2024. Operating income for 2024 was $59.4 billion, reflecting the core strength of their businesses despite fluctuations in investment gains. The key takeaway here? Berkshire's earnings are tied not just to operations, but also to the performance of their massive equity portfolio. When markets dip, they feel it, but their diversified operations keep the ship steady. Let's dig into the financial statements for a clearer picture of Berkshire's health. On the balance sheet, total assets for 2024 stood at $1.1 trillion, up from $1.07 trillion in 2023. They're sitting on $47.7 billion in cash and cash equivalents, though that's a bit higher than last year's $38 billion, still a massive war chest for acquisitions or buybacks. Total liabilities are at $502.2 billion, with stockholders' equity at $649. $4 billion, showing a strong net worth. Their current ratio is an insane 48.7, meaning they've got way more current assets than liabilities. Liquidity isn't a concern here. Looking at cash flow, operating cash flow for 2024 was $30.6 billion, down from $49.2 billion in 2023, with free cash flow at $11.6 billion after $18.9 billion in capital expenditures. Return on equity sits at 10.1%, which is decent, though return on invested capital is lower at 3.97%. Overall, these numbers scream stability, even if growth isn't explosive. Debt to equity is low at 0.21, so they're not over-leveraged, a classic Buffett move. Now let's tackle valuation. At a current stock price of around $494, Berkshire's market cap is $1.6 trillion. Their price-to-earnings ratio for trailing 12 months is 15.94, which isn't crazy high compared to the S&P 500 average or even their industry peers in diversified insurance, where the average PE is around 15.24. Price to sales is 2.84, again reasonable for a conglomerate like this. Looking forward, analysts peg the forward PE for 2025 at 23.2, dropping to 20.93 by 2026, suggesting the market expects steady earnings growth. Enterprise value is $1.15 trillion, factoring in debt and cash. Some analysts argue Berkshire is undervalued, with estimates of intrinsic value as high as $1.8 trillion against their current $1.1 trillion market cap. That's a big gap, hinting at potential upside if you buy into that logic. But remember, valuation for a company this complex isn't straightforward. It's not just about numbers, but also about faith in management's capital allocation. Let's break down Berkshire Hathaway through a SWOT analysis: strengths, weaknesses, opportunities, and threats. Starting with strengths, their financial performance is rock solid with consistent profitability and a massive cash reserve, over $350 billion by some estimates. Their diversified portfolio across insurance, energy, rail, and consumer goods reduces risk. Plus, the brand power tied to Warren Buffett and now Greg Abel's proven track record inspires confidence. Weaknesses? Well, their sheer size can be a drag. Finding needle-moving acquisitions gets harder when you're this big. Also, reliance on market performance for investment gains means volatility can hit hard, as seen in 2022. Opportunities are plenty. Think strategic acquisitions with that cash pile, or growth in energy through Berkshire Hathaway Energy as the world shifts to renewables. Threats include economic downturns impacting their operating businesses, regulatory risks in insurance and rail, and the big question mark of leadership transition post-Buffett. Can Abel replicate that magic? It's a mixed bag, but the strengths outweigh the risks for long-term investors. Let's check out recent performance. Over the past week, BRK-B is down 0.38%, but it's up 2.65% over the last month. Zoom out to 6 months, and it's up 1.96%, with a one-year gain of 3.41%. Over 5 years, though, a whopping 103.39% return, outpacing many peers in the financial services sector, which gained 28.8% over the same period. Compared to the diversified insurance industry, which is up just 1.68% in a year, Berkshire is holding its own. The stock's beta is 0.7, so it's less volatile than the broader market, which is appealing for conservative investors. Short term, the chart shows some consolidation. Could be a buying opportunity if it breaks above resistance around $500, but watch for broader market sentiment given recent analyst uncertainty about post-Buffett leadership.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.